A city skyline at dusk. Glass towers reflect the last gold of the sun, each window a fragment of ambition. From inside, a million screens flicker with numbers, charts, faces, evidence of the relentless pulse of modern business. Somewhere in those towers, fortunes are being made and lost. For every empire that rises, another teeters on the edge. Tonight, we open the case file on the rise and collapse of modern business empires, how they capture our imagination, command our markets, and sometimes fall apart faster than anyone thought possible. The stakes are enormous. At the top, a handful of companies control entire industries, set the pace of innovation, and shape the future of work. Their founders become icons, their logos symbols of progress. But beneath the surface, questions linger. What really holds these empires together? And what happens when their foundations begin to crack? To understand the allure, we have to go back to the beginning. Every empire starts with a promise. For some, it's the dream of transforming the way we live. A new technology, a radical business model, a vision that seems almost too bold. Investors line up, convinced they've found the next big thing. Employees sign on, drawn by the energy and the possibility. Customers flock to the products, eager to be part of something new. Think of the dot-com boom at the turn of the century. Startups with little more than a website and a pitch deck soared to valuations in the billions. Or the rise of social media platforms, which promised to connect the world and succeeded, at least for a while. Or the consumer tech giants who reimagined retail, transportation, even the way we eat. The world wanted to believe, and for a time it did. It's easy to see why. Amazon transformed shopping. Apple changed the way we communicate and create. Tesla made electric cars cool. These companies seemed unstoppable, their founders hailed as visionaries. The media told stories of dorm room beginnings, relentless hustle, and outsized rewards. The narrative was seductive. With enough vision and drive, anyone could build an empire. But beneath the headlines, something else was happening. The very traits that fueled these meteoric rises, risk-taking, rapid growth, the cult of personality, sometimes planted the seeds of trouble. The pressure to deliver results, quarter after quarter, year after year, became relentless. Shortcuts were tempting. Warnings were easy to ignore. Somewhere in the story of every fallen empire, there's a hidden flaw. Sometimes it's a business model that works only under perfect conditions. Sometimes it's unchecked power at the top, with no one willing to say no. Sometimes it's a culture that rewards speed over substance, growth over governance. These flaws aren't always obvious, at least not at first. Consider the case of WeWork. Founded on the idea of revolutionizing office space, WeWork grew at a breakneck pace. Investors poured in billions, seduced by the vision of a new way to work. The company's charismatic founder became a symbol of the era's exuberance. But behind the scenes, the model was fragile. WeWork leased office space long-term and rented it short-term, exposing itself to huge risks if demand ever faltered. Governance was loose. Financials were opaque. The company was spending far more than it was making. For a while, it didn't matter. The promise was enough. Or look at the fall of Enron, years earlier. Once celebrated as an innovator in energy trading, Enron's leaders built a culture of secrecy and risk-taking. Profits were exaggerated, losses hidden off the books. The company became a Wall Street darling until the truth came out. In both cases, the flaw was there all along. It just took the right trigger to bring it into the light. Sometimes the trigger is a single event, a failed product launch, a missed earnings target, a scandal that can't be ignored. Sometimes it's a shift in the broader market, a new competitor, a change in regulation, or simply the end of a boom cycle. Suddenly, the story unravels. In WeWork's case, it was the lead-up to an IPO. When the company filed to go public, investors and journalists finally got a look at the numbers. The losses were staggering. The founder's leadership style came under scrutiny. Within weeks, the IPO was pulled, the valuation collapsed, and the founder was out. Billions of dollars in value evaporated almost overnight. Enron's collapse was triggered by a series of investigations. As the truth about its accounting practices emerged, confidence vanished. The company filed for bankruptcy, wiping out thousands of jobs and billions in shareholder value. The fallout spread throughout the financial system. These collapses don't just impact the companies themselves. They ripple outward, affecting employees, investors, even entire industries. In the aftermath, regulators step in, laws change, investors become more cautious. For a while, the system seems to correct itself. But the cycle repeats. New empires rise fueled by the same optimism, the same willingness to believe that this time will be different. Some learn from the past, others repeat the same mistakes. Sometimes, the collapse isn't total. Power shifts instead of disappearing. Look at what happened in the world of big box retail. For decades, chains like Sears and Toys R Us dominated American shopping. Their stores anchored malls and shaped communities. But as online commerce exploded, their business models struggled to adapt. Some disappeared. Others reinvented themselves, merging, rebranding, or pivoting to survive. Or consider the streaming wars. Companies like Netflix upended the entertainment industry, only to face a flood of new competitors from old media giants. The balance of power shifted again as the market tested which business models could endure the pressures of endless content and changing consumer habits. In every case, the collapse or shift leaves a trail of lessons. Some are technical: the importance of transparency, the dangers of over-leverage, the need for real profitability. Others are cultural: the risks of unchecked leadership, the value of dissent, the importance of asking hard questions before the crisis hits. But perhaps the biggest lesson is about belief itself. Markets run on trust. When that trust is misplaced, when the story outpaces the substance, the reckoning can be swift and brutal. Yet belief is also what drives progress. The challenge is to balance vision with vigilance, ambition with accountability. The rise and collapse of business empires is as old as commerce itself. But in an age of instant information and global markets, the stakes are higher and the falls more dramatic. For every new empire that captures our imagination, it's worth remembering, even the most dazzling stories are built on real-world foundations. When those foundations crack, the story can change in an instant. If you found this case file thought-provoking, consider subscribing for more deep dives into the forces shaping business and finance.